Hey, hi everyone. Welcome to our video series in which we are going to analyze mutual fund in 2 minutes. I am CA Aditya Manikar. Feel free to comment or drop me a text regarding any doubts that you might have regarding mutual funds. So, the fund that we are discussing today is Motilal Oswal Midcap Fund. Let's talk about the return that this fund has generated. So, in the past 1 year, it has given 69% return. The 3 year CAGR return is approximately 40%, and in 5 years it has given 35% CAGR. So the benchmark against which these returns are mapped for Motilal Oswal Midcap is the 150 Midcap Index, and this is one of the most difficult index to beat for any mutual funds. So the mere fact that Motilal Oswal Midcap Fund has been able to consistently beat this benchmark over the last 10 years is quite remarkable, and the reason for that lies in its portfolio. So just pay close attention. So how has the mutual fund constructed its portfolio? It has only 20 stocks in its portfolio, whereas the index has 150 stocks. BSE Midcap has 150 stocks. This portfolio has 20 stocks. So this makes this mutual fund a very high risk mutual fund. So you should only invest into this mutual fund if you are a very high risk investor, you are a very aggressive investor. So, what is the portfolio construct of this mutual fund? It is holding 83% in equity right now. It is waiting for some opportunities or dip in the market. So, it is having 15% money in debt and some idle 2% allocation to cash and cash equivalents. So, this is the portfolio construct. And if you can scroll down, the top allocations of this mutual fund are Polycap, Persistent, Kalyan Jewelers, Geo, Coforge. So, if you see the major allocation, so approximately 50% of the allocation that this mutual fund has done in the current market scenario is to stable and consistently strong mid cap companies. So, even if there is a correction in the market, the fund will relatively remain stable. Also, let's take a quick look at the risk that you are taking with this mutual fund. So, when the COVID crisis had hit, this mutual fund had given a negative 37% return in a month, and the worst performance of this fund is negative 26%. So, this adverse period help us understand, okay, if the market goes down, what kind of risk am I taking in the market? So that is very important. So this fund is good if you want to hold your money for the next 5 years into this fund, but you should make sure that you can digest this 25% type of risk in case the market goes through correction. Thank you for listening. Bye.